With that streaming, let me go ahead and share my screen with everyone here. And just please let me know if you are. Oh, nope, that didn't work. See, that's how we got to check that again. There we go. You should see it now. All right. Yeah, and some of you have snow. We've gotten snow off and on. I was plowing the driveway the other day, and about an hour later, it was completely white again, and then we had some rain mixed with snow. So we got all kinds of interesting weather over the long weekend. But it was a good time. Got to hang out with the kids. They got to make some snowmen and drive around in our ATV with me plowing the driveway. So all good memories and good stuff. I just won't mind if it gets a little bit warmer here, starting anytime. Um, let's go ahead and cover a couple of the key elements. Like I said, agenda for today. I want to talk a little bit about what's going on in the sectors, a little bit about what's going on in the overall market. But to be honest, it's not too much to share there until we kind of get through a decision point. I want to cover a couple earnings and ones that I'm looking at. And we'll review the weekend trade that we took on Friday, and then cover a couple of things. And then I have a free trade idea for you. Like I said, a little bit different than the free trade idea I thought I was going to give you. I'll explain why. And then I also want to talk about how to target some bigger wins here using jump trades, which is something that I'm a big fan of. I know many of you have used that strategy as well. So I want to talk about that here at the end. So a lot to fit in. I'll go as quickly as I can while also keeping an eye on the chat. So here is kind of weekly head start on the sectors. You can see here we have XLU, XLE, XLB kind of leading the charge early on the day. This is maybe an hour old or so, but we kind of have these non-speculative sectors leading the charge here so far: utilities, energies, and basic materials. And then kind of toward the bottom, we're starting to get our usual suspects down here with health and consumer discretionary continuing to be weak here for the last 5 to 10 days. Interestingly, health is quite a mixed bag. For example, Eli Lilly is actually up today and doing fairly well. Very weird market action. I shared it earlier. We have a lot of stable stocks, things like energy and utilities that are doing well, but then we have things like Walmart that are actually negative on the day. At the same time, in the tech sector, we have Meta and a lot of the other Mag 7 that are down. We have Apple kind of break even, then Nvidia's up 2%. And you see this kind of weird mix, like I just mentioned with health. Eli Lilly's actually up today, other health stocks down. And so I don't think we're getting any kind of coalition of activity. I think we're just in that volatile mix, maybe some lower liquidity as people come back from the long weekend, but just a kind of an interesting mix. We do have financials building up a little bit more strength. Like we talked about last week, I said if financials continue to be weak last week, might be kind of a snapback trade. I still believe that. I still like financials as an opportunity to trade back to all-time highs. And we're getting a nice little lift so far today. Nothing huge, but about 0.5% up. What you'll notice here is that across all of these, very interesting kind of on the divergent ends, where if you put gold into this chart, it would be way up here at the top. And if you put Bitcoin into the chart, it would be way down here at the bottom. So normally what we've been seeing lately is that gold and Bitcoin are actually kind of in the middle. They're somewhere within the normal range of dispersion on these. But today, gold would be outperforming every single sector, Bitcoin significantly underperforming every sector. So we're seeing divergence in that way as well. What does that all mean? I don't think anything right now. It's a Tuesday after a long weekend, halfway through the first day of market open action. I just think if we see these continue to separate, we need to be mindful of, are we trading some of those snapback opportunities like we've been doing more lately, or are we actually seeing a more concrete rotation? Energy is starting to convince me that we might have a real rotation in our hands. I think we will have billions and billions of dollars available in liquidity that can move to energy, move towards those high dividends, things like that if the market gets more shaky. Now, like I've been saying, I think that's more likely to happen later in the year. So kind of the normal seasonal pattern where the market is fairly optimistic through the first quarter, maybe break even or some pullbacks in the second quarter. And then as winter comes along again, 8 months from now, 9 months from now, we start to see energy pick back up. And so that's more my expectation. But so far, I mean, right now, we're definitely getting energy picking up more momentum than we've seen in quite some time. By the way, technology, like I said, split the difference. Got some up, some down. Palantir, NVIDIA, some of those up. Obviously, a couple big earnings, which we'll talk about as well. So that's where we're at just one day in so far. Now, looking at the Nasdaq, which I use QQQ to do that, my most traded asset. The question is, as you can see right here, I put in the notes, are we really doing it? Is this real? It seems like most of the surges that we've had recently have been rejected. We talked about this last week, so I won't beat a dead horse too much. But when we've had kind of multiple gap up big runs, we've had those rejected for the most part to the tune of 3-4%, sometimes a little bit steeper than that. And then we've had bounce backs into the mean. So the question is, are we really doing that? Has this been a several month correction pattern that we're now going to actually go back and beat these highs by 3, 5, 8%, some big rally? And I think until we know the answer to that, it's going to be hard to be really directional in some of our trading. Obviously, with individual sectors and individual stocks, we can do that. With other strategies like automated options, we just follow our rules. No speculation to be made there. But kind of everything else, everything that's more speculative and directional in nature, I think we need to build some confidence here whether we're going to get a run on the new highs. And obviously right now, we're just teetering, which personally, I think the reason we're teetering is exactly in and of itself because we're at those all-time highs and we're trying to figure out, okay, are we going to shake this thing out? Is there enough confidence in here? Like I shared last week, I think we have a mix of probably more negative macro headlines, more negative economic impacts, but at the same time, a ton of liquidity that's pushing this market higher. And is it going to be enough to sustain a higher move? Now, how do we actually plan for that? Well, I think you kind of got to wait for the market and follow it. I know that's kind of the easy way out, but I think it really is reality. If in this kind of market where we're seeing momentum very clearly show up in both directions, I think you can either do one of two things. Number one, you can just continue to take like kind of high risk defined trades. When I say high risk, I mean, what I really mean is low probability, not high risk. But for some reason, people interchange those. So I find myself saying high risk, but what I really mean is low probability. But low probability risk defined trades, the things that we do like debit spreads, where you can say, listen, if the market is going to take off, let me get a piece of the action here, buy a relatively cheap debit spread. And if it does sprint up, then I'll make 100%, 200% on that move. So I think that's one option. And I'm totally fine with that option. Normally when the market breaks all-time highs, you do get some continuation within the next couple of weeks. So I'm totally fine with that type of approach. The other type of approach is really the wait and see approach. And that's what I'm doing with a lot of my kind of discretionary ideas. I'm more in wait and see. I have enough things that are just follow the system mechanical that I'm going to be trading no matter what. So for the rest of my, portfolio that I would do more discretionary based trading, I'm very much in a wait and see approach here. And the easiest way for me to do that is just to see what happens on the weekly close. What does the weekly chart look like on Friday afternoon, and kind of wait for that to give me a strong signal. Now, does that guarantee that we're on the right side of the market when you get the weekly close? Of course not. We've had some weekly closes rejected already just in the last 3 months or so. But I do think that that's the best thing that you can do to clarify if we have enough momentum where the market feels decisive on these new highs. And so, again, two different ways you can approach that. I think both make sense. It's just a matter of your risk appetite and kind of what else you have in your portfolio. So that's the Nasdaq. And right now, I think the Nasdaq is the more important question for the indexes. Why? Well, because the S&P is even less sure. We barely touch the highs here, just within pennies, and we don't have any semblance of closing. Like at least last week on the Nasdaq, we made one close minorly above the highs, where now we can see if we can build on it. Right now in the S&P, we don't even have that. So I think we need to wait for the Nasdaq to be the leading charge and then assume that the S&P will follow suit. So I think the S&P is even less sure. I think it will follow suit, but I don't think that, using it as the barometer for where the market's going makes as much sense because the Nasdaq is simply leading the charge right now, and I think that's where you can get a more obvious kind of directive story is out of the Nasdaq. All right. Let's look at the weekend trade update. And as my friend here says, I mean, not good. Our coin trade has backed down about 3% today. So really negative move. Now, for coin, to be clear, 3% is really not a big move on that particular stock. It's kind of within the range. But what we were hoping for was that it was going to be 3% up, not 3% down. Right now, my trade's down about $440, about 59% negative on this trade. Now, one of the things that I like about coin, obviously, is that even though I'm down 59% on the trade, because it does move so much, still very much within the wheelhouse of making a positive move. So if coin has a couple positive days, hey, you're right back in the mix. But obviously, so far, I mean, not good. Now, what happened here? Well, Bitcoin underperformed on the long weekend quite a bit. Like I said, if you look at Bitcoin comparative to the other sectors, it's actually would be the weakest sector by a significant margin over the long weekend. That's very much not what we were hoping and certainly not what we were expecting from Bitcoin. Bitcoin typically, and I say typically meaning, maybe 60 to 70% of the time, has really good long weekend and holiday type of performance. Now, there's lots of speculation why that happens with Bitcoin, why it has a tendency to move and perform pretty well during those periods of time. The simplest version of that story is, hey, the other markets are closed, and so, bored traders can pump liquidity into Bitcoin 24/7. So on long weekends and holidays, where there's not a lot of action on Nvidia, they start pumping money into Bitcoin. Whether it's as simple as that, I don't know, but the tendency has been for Bitcoin to do quite well over long weekends and holidays. So we were kind of hoping between this two-factor analysis of coin absolutely smashing its earnings last Thursday, and then also the fact that Bitcoin could act as a tailwind would put us in good shape on coin. Bitcoin certainly did not help as a tailwind, and it's obviously yet to be determined whether those earnings are going to be priced back into the market quickly or not. I'm hoping that they're priced back in quickly because not only do I have a trade here, but I'm holding a ton of the stock, hoping that those earnings are priced back in and that we get coin, back over $300, even at $320 a share within the first quarter. Now that's starting to look pretty lofty as coin doesn't do anything, just kind of sits, like I said, negative 3% today. It was 1.5% on Friday, something. So really not doing a whole lot of reaction, but that's still what I'm holding on to on my coin analysis and just hoping that those get priced back in. Sometimes earnings do get priced back in. Sometimes they don't. I still think that coin on the long-term view has quite a positive outlook because unless you think that the post-halving cycle in Bitcoin has already topped out, you think that, okay, it's going to act as a tailwind for coin anyway at some point, whether that's now, whether that's in Q2, whether that's in Q3. That's kind of the long-term, support system for coin. And I still do expect that to come to play. I was just hoping we'd get an immediate tailwind this week, which so far we haven't. Got, 4.5 trading days, 3.5 trading days here left to see if coin can make a move. One big catalyst and coin can make a really nice move. That's one of the reasons I like both trading stocks like that and trading this line in the sand structure. So trading that line in the sand structure means that even if it's down 3%, 5%, whatever, as long as you have a line in the sand, which in our case we do, if the market makes a rebound past that, you instantly are back to the full possible win. Whereas with the call option, you have to now make back that ground, make back all the time decay, and then overachieve that move by an extraordinary amount. So that's why a call on coin right now would be much, much uglier compared to our trade, which, hey, if coin gets on a run, gets back above our line in the sand, we're immediately back in position for a full gain. So I'm holding on to coin, both the long-term position and the debit spread. If it expires Friday below our level, yes, I'll lose 100% on this trade. Obviously, that's part of the game. That's why I told you on Friday, hey, high risk binary trade. Those are typically the kind of moves that I like to trade. And we'll give coin another 3.5 days here and see if it can make that move. But I just wanted to give you an update on where we are so far. I'm sure we'll review it again on Friday on our live session. Okay, earnings to watch. So this is today after market close. ANET, I think, is the most interesting one. Has about a 10% implied move. I'll probably buy some shares on ANET today, do a covered call, try to find something in the middle. It got beaten down a little bit, so I think it's in decent position here just from a loss mitigation standpoint. I don't necessarily think it has a super strong catalyst to go up 10%. But I think it has a kind of a mitigation here where I wouldn't expect a massive beat. Now, of course, last time I said that, it was on Reddit, which took a big, fat, ugly beat. So, earnings, you always have to be prepared for max risk. But I think ANET, in its position, it has some loss mitigation just because it's not, peaking to all-time highs, kind of like Coin was when its earnings came out. It put up like a 6% positive day the day before earnings. ANET, I think, is in more of a healthy middle ground going into earnings. A couple other interesting ones here. I mean, some of the energy companies like Oxy and EQT, I think will tell us as well if that energy rotation that I talked about is significant and if that's ongoing. If we see some really positive earnings on the energy side, that could certainly help there. Devon as well is in that group. Not a ton of other ones that I'm super interested in. These payment technology ones are always a question mark. So, nothing too crazy here that I'm super excited about. I basically want to see, can ANET put together a nice tech beat and give the tech sector some momentum? And then, how well do the energy earnings perform to kind of continue to potentially drive that rotation? That's today. So Tuesday, actually reporting after market. Now, tomorrow, before the market opens, so this is not tomorrow after the market opens, this is before, meaning you'd have to take trades today if you were actively trading earnings. We have a whole other set. Fair amount of financial and technology this week. HSBC is going to be the biggest financial tomorrow before the market. We have Garmin. We have tech. We have a couple other, minor ones. I mean, Wix probably has a decent expected move. I didn't even look at it. And then Wingstop is an interesting one as well because Wingstop has been historically a phenomenally, one of the most underrated stocks on the planet. But then, over the last year has actually started underperforming. Interesting one, I guess, just to keep an eye on. But none of these are ones that I'm actively trading on. I just want to put on your radar to keep an eye before earnings tomorrow morning. So again, these are both today, aftermarket, and tomorrow are ones that will happen before the open. So if you wanted to trade, you want to trade Garmin, obviously you would need to put on a trade today, not tomorrow, because the earnings are coming before the market open tomorrow. Okay, cruising along. Still got a free trade to get to, and then I also want to kind of talk about the opportunity with jump trades targeting big moves. So let's keep on chugging along here. Okay, so potential gold trade. So this is gold. And it's actually quite a different trade than what I was planning. So how many of you guys are in my Telegram and saw my post, I think that was yesterday, about gold potentially making a move, starting to pick up some demand in the long weekend? You should have seen that post. I think it was yesterday afternoon that I posted that. And we got the move. I was hoping that we would, be able to get into that trade today. And my original plan was to target all-time highs on GLD because you would have had a really nice gap to target all-time highs on GLD. Unfortunately, gold already made the move. So it already went to all-time highs after that big sell-off, which is a really nice move for gold. And now we kind of have to flip this trade on its head and trade it more as a direct momentum play on the crack of all-time highs, looking for an even higher move. So I would have loved to get you into to GLD more around the 265. Instead, we're trading it at the all-time highs, looking for a pure momentum play. So if you want to take this move, it's a little bit longer term just because as gold has made new highs lately, it's normally kind of slow played it into making higher highs. And so we're giving this one a little bit more time. You can see our expiration here is March 21. So we're giving this trade about 1 month. Here, you can see it here, about 1 month to make a 2% bullish move. That's really the entire trade here on gold. Can gold move 2% higher over the next month, and net higher? And to set up that trade is pretty simple. What we do is we put a GLD debit spread on. Now, a debit spread is when you buy a call and sell a call at the same time. At least a call debit spread is where you buy a call and sell a call at the same time for a net cost, and then you look to sell it at a higher price. It's risk defined. It's fairly cheap to trade, even though this is a $5 spread. Still fairly cheap to trade because you're not trading for all that implied volatility and everything like that. And most brokers let you put this in very easily on one ticket, where you can just choose vertical or call debit spread, and you can go ahead and basically with one click of a button set up that vertical trade. So this is our new GLD trade, basically looking for gold to get up past 275 by March 21. And that's really all this spread is looking for. Our line in the sand based on a certain date, in this case, March 21. Now, this trade would cost about $2.20 to put on. So about 220 bucks per contract. Now, what I normally do with these trades is I go ahead and I put a target on the trade as soon as I'm filled. So as soon as I buy this debit spread for, right around 220, I'll go ahead and set up my closing order immediately after, where I use a good till canceled limit for that debit spread. And that way, if gold moves, let's say it moves tomorrow 2% higher, there's a good chance I'll get taken out of that trade early, even if I'm not paying attention, versus having to manage the trade over the next month. This way, if you put this good till canceled credit target on the position, it's just going to sit in there in your brokerage account for the next month, waiting to be taken out. Okay, so really a binary trade like we normally do in these classes, where gold's either going to go up and you have about an 82% ROI, or it's never going to make a move and it's going to expire worthless and you lose the trade. Pretty much a binary situation like we normally use in these kind of trades. So this debit spread, by the way, is about as straightforward as you can put together from a risk to reward standpoint, because you're not setting up anything open-ended. You don't really have risk of assignment here. You're just paying a certain price like you would for any option, and then you're looking to sell it for a higher price. Barry, okay, if you are brand new to debit spreads, the first thing I'd recommend is going through the masterclass. If you click, if you go into there, underneath there's master classes, there's a more button. And then if you scroll down and go to the very first masterclass, there's like a 90-minute masterclass in there. There's also, by the way, the slides in there as well that you can kind of flip through that walk you, even if you're totally new, that take you step by step. Obviously, in today's session, I'm moving pretty quick, so we're just kind of going through a trade. People who understand the spreads already are going to, be able to pick it up and go quickly. But if you are brand new, you're going to have to kind of do some training along the way before these debit spreads make immediate sense to you and you can follow along. And yes, any broker will do this. So any broker will do this. If you have Robinhood, if you have Tasty Trade, if you have E-Trade, if you have Schwab, you might need to do a little YouTubing to see how it works and what platform to use. But pretty much any brokerage is going to let you put up a debit spread. You just have to have the right level options in order to do that. Okay, so the last thing I want to cover, gold bounced a little bit, so 225, 230 would probably be the max. I did this. I did this about an hour ago, so it might have bounced a couple pennies. Probably don't want to pay more than 230 for this trade, because you are asking for a fairly significant move of about 2% on gold. And for gold, that's a big move. You're giving it about a month. Now, the last thing I want to cover is this, okay? I want to cover the actual trade opportunities that I mentioned at the beginning using jump trades. How do we target these bigger moves? Many of you are familiar with jump trades. You trade them every week with me, but many of you, based on last week, were asking, had no idea how we actually continue to twist options and go for these bigger gains. So I want to take a minute and go through that. I also have something a little special up my sleeve that we've never done before to kind of help you get in the door if you are interested in targeting these bigger winners using jump trades. So jump trades are kind of my highest reward, my big kind of like home run trades. If you're familiar with me, you normally will be familiar with overhead options, where we go for 15 to 20%, or automated options, where we'll go for 50% using these kind of trades. With jump trades, we're twisting the knife a little bit further, and we're targeting, 100%, 150%, 200%, sometimes even 300% on the same kind of trade with defined risk. So if you're not familiar with that, I just want to take maybe another 10 minutes here and run through that really quickly. And then, like I said, I have something a little special up my sleeve just to help people get in and give jump trades a try if you have not yet traded jump trades with me. And I will go ahead and post this trade in the chat real quick before we jump in so that if anyone needs this trade before I move on, that you have it. So let me post that in there for you. And now you have that. Okay. With that being said, before you leave, let's talk about what I think is one of the biggest opportunities for the kind of markets that we just talked about jumping all around. So it all starts with a brand new trade targeting about a 200% return that we're going to have this week. And so when I just said we target big winners, I'm not joking. We are targeting big winners, about 200% for our next opportunity this week. And that's very typical for our targets on jump trades. So 190% on Tesla. We had a 233% on MSTR. I actually had a crazy one a while ago on SMCI with 1,500% using the same kind of option structure that I was just talking about. So that's really what jump trades is all about. It's targeting these big, outsized. Let's be very clear about what we're talking about because I always want everyone to be on the same page whenever I talk about gains and what we're actually doing. So you're going to see some really large returns. Like that jump trade is all about these large returns. The average winner is actually 182%. So we're not talking about every once in a while we go for bigger gains. The average win is 182%. But this is really important. These aren't the hypothetical what could happen. Every example with jump trades are real money trades that I actually place. These are not hypothetical entries. So I call them jump trades. They're some of the most explosive, high-paying opportunities I've ever seen. For me, they represent the biggest targets I ever go after in my own personal trading. So CCJ is a great example of this. Back in mid-March to the beginning of May, CCJ was ripping. And obviously, most people thought, okay, it's going to have a pullback. We're overdue. We're overcooked here. But even though that's probably the case, just like our gold trade there, a lot of times I will take these pure momentum trades. So on May 16th, I went ahead and took a jump trade on CCJ. And the cool thing here is the jump trade cost about 29 cents a contract, which is incredibly cheap for these high volatility markets. Sure enough, 4 days later, we hit a 200% winner on CCJ. And like I just shared with you on gold, we set that to close out automatically, which is a really important part of the process if you ask me. So 500 bucks into CCJ, flipped to about $1,000 in profit in just 4 days. If you put 5K, obviously much bigger return, about a $10,000 windfall on CCJ. And we do this over and over and over again. So like I said, this is not like every once in a while we go for a big winner. With jump trades, we go for big winners on every opportunity. For example, look at coin. So coin, very similar story. Way overextended right after halving when it was, basically doubled over the course of 7 weeks. Like I said, coin makes big moves. Now, everything would have said, okay, it's overextended, back away from the stock, way up at the top of the Bollinger Bands, RSI, everything would have told you, hey, this is overcooked, back away from coin. We need another pullback before we enter. But that's not how I trade at all. If you follow the way that I trade, I will typically follow momentum because I don't need some big new move. I don't need to wait for the market to pull back and then get an 8% or a 12% move in the stock. I just need a little bit of a beat and I can make a really nice return. This one was about 65 cents a contract. Again, very cheap based on coin options. And about 3 days later, that coin trade hit for 284%. So if you put 500 bucks into that one, it's about a $2,420 gain on coin in a couple of days. So once again, I'm sorry I'm beating a dead horse, but the point being here, these are the kind of trades where I really will go for those quantum leaps in my account. Throw 1,200 bucks or 1,500 bucks into a trade and go for a 3, 4, 5K jump in profits. If you put 2,500 bucks on coin, it's a $12,100 gain. Again, that's based on a real trade, not a back test. Now, with jump trades, you don't need a massive move to get a really big return. And that's the whole point. That's if you write anything down about why jump trades works versus why most home run strategies don't work, it's exactly this reality. Most home run strategies require you to time up huge overperforming moves in the stock. With jump trades, that's not what we're going for. So we can usually get about 100 to 200% return, sometimes actually even more with a tiny move in the stock, which unlocks a whole new realm of possibilities in the stock market. For example, CrowdStrike, one of my absolute favorite examples of how this works. So CrowdStrike had earnings, then they had a big sell-off, like a 15% sell-off, and most investors obviously are getting beat up on that type of pullback. But with jump trades, we had a March 11th entry here, put about 95 cents into the trade. And as you can see from there, CrowdStrike did almost nothing. It only moved about 2.5%, which after like a 15% move in one day, that's nothing. I mean, it looks like a totally sideways move. Yet the jump trade actually hit the jackpot about 163% on that move that looked like an absolute nothing burger on jump trades. So typically, you need highly speculative, out of the money options, hoping that the stock makes a big move. That's how people go for triple digit gains. But I just showed you we don't actually need that. Okay. So how's that even possible? Well, it's exactly what we were just looking at. It's how to continue to twist and game the options to set up these kind of risk rewards. Not credit spreads, not naked options, not those overpriced call options, which is exactly how most people do it. Most of the time, premiums are so inflated that you actually need a huge move to break even. If you guys were here last week, I was showing you some of the earnings trades where you need a 6% move, an 8% move, a 9% move, not to make a huge win on earnings, but literally just to break even. And that's because Wall Street market makers set the options price on the expected move that a stock might make in any given time frame. Again, if you're taking any notes, this is a really important note. If you want to be a successful options trader, you have to know what the expected move is. If you don't know what the expected move is, you don't even know what kind of move you need to overcome to make any money. You don't even know how to structure your trade to overcome what the market makers are pricing in. Yet most people learn how to trade options, they learn how to buy a call when the stock's going up, and they literally never even learn how the expected move works. So they don't even know what they're buying. They don't even know what the risk reward is based on the market. So the key here is that Wall Street prices the stock based on where it might already go. And typically, it's a number that the stock isn't going to be likely to reach. Why? Well, because that's how they make their money, right? If they're an option seller, the way they make their money is they sell you an option for a move that the stock isn't likely to make, and then it expires, and they keep all the money. Now, that might be a little in the weeds. Again, if you're new to options, don't worry. You don't need to understand implied volatility, expected move to take advantage of what I'm talking about. You just need to know it exists. But thanks to our way that we can twist these regular options, we're able to shoot for doubles, sometimes even triples when the stock doesn't come anywhere near that expected move, okay, which is really important. So let's go through Chipotle CMG. Now, this is before split because it's such a good example. So way back in June, Chipotle was trading at about $3,365 per share. Now, I'm using this example because it's before Chipotle split, which is really important to showing you something about this. The market makers set the expected move at about $3,420. Okay, that's where it needed to move for the call options just to break even. Okay, so you needed the stock to go up $55 in a week just to break even. I don't know about you, but if I buy a call option, the stock that I bought the call option on goes up $50 and I'm still losing money, I'm going to be pretty upset. But that's exactly how regular call options work. As you can see, not exactly probabilities in your favor to make a move in that direction that quickly. But with jump trades, instead of needing a $55 move, we needed about a $15 move, not to break even, but to more than double my money. So about a 0.4% move to double my money on the trade, only a fraction of what the market makers were charging regular options. So you could have taken this trade for about $2.80 a contract. Why is that important? Why am I showing you this example going way back before the split? Well, because the regular options were $40 per contract. $40 for one option contract, hoping that the stock made a $50+ move the next, week. Crazy. Sure enough, next day, hit our target, 150% gain. We didn't have to spend $4,000 hoping for the best. Here's one on Amera, another great example. So Amera trading about $18 a share. Expected move, $20.66. Now, $2.37 might not sound like a huge, crazy move, but it's literally a 13% move on the stock just for the options to break even. So let me ask you again. You buy a call option on a stock, it goes up 10% in your favor on the stock that you bought the call option on. You check your account, you think you're rich, and you're still down on that call option. I don't know about you, but I would be furious. Yet that's how most call options work, and people don't even realize what they're paying for. Now, 12.9% is a crazy amount of movement, if you ask me, to get right just to break even. But we only needed about a 71-cent move, about a quarter of the expected move on our jump trade. And that's not to break even, that's to make a 163% gain. So one trade requires a 13% move to break even. The other one needs about a 3% move to make 163%. Hopefully you can see how dramatically different the set of outcomes are for jump trades. And of course, I've done this now on tons of different stocks: Chipotle, Meta, Coinbase, Nvidia, CrowdStrike, all kinds of different stocks. And if you want to hop on the next jump trade with me, which we're going to do here in the next, actually, probably going to have one today here. I am today hoping to get about 100 new folks to join me on our next trade. Like I said, I have something a little special up my sleeve to help you get in. Now, inside jump trades, we are solely focused on targeting these big moves. Really, the only thing we do in jump trades is go for 100, 150, 200, 250% trades without needing a big move in the stock. That's what the entire strategy is devoted to. Now, after live trading this for about a year now, the real money results are incredible because they show that even though we're going for these big gains, we can do it for a very small amount of money, about $100 for the average position. So you don't need a huge account to do this. A 3.0 profit factor, okay? So, you're getting about 3 times the wins as your losses. I'll sign up for that any day. And then about a 71% average return, winners and losers combined. So if you close your eyes and take a random jump trade, the average return is 71%. Like I said, the average winner over 180%. So if you take one of the spots, if you join jump trades today, every single time a trade triggers, you get my very best jump trade option. As a member, you get about 1 or 2 a week. We've been averaging more like 1 a week. I've been kind of more cautious in these volatile markets, but sometimes the market gets picked up and you might get 2, 3, or 4 jump trades in a given week. Again, every single one, same strategy, same structure that has been able to score about 182% on the average winner. Now, every alert, just like any of my services, is going to give you all the details step by step by step, so you know exactly how to take the trade. The ticker, when to place it, the options, entry and exit, by the way, it's all in there. You even get the exact target like I shared today so that you can set up the trade and then close your computer and walk away. And if we get a move in the stock, you'll be able to hit that target and get out of the trade, which is exactly how I trade them. You'll also get cell phone alerts, telegram alerts, just to make sure you don't miss any jump trade. In fact, we have a dedicated separate Telegram only for jump trades, so that even if you're out and about, you get the whole entire alert in the jump trades Telegram channel, which I recommend you join as soon as you jump in. Now, I also keep track of the performance. You can go back and look through all my real trades. Again, they're all live, real-time trades, no back tests, no theory in there. Plus, you also get downside jumps. So if we see something popping up on the downside, we will actually trade a downside jump alert as well. So like I mentioned, I'd love to get a new group of traders before our next opportunity. Someone who started with just a small $1,000 account in each of the jump trades so far would have ended up with 40 grand in profit. That's what's starting with $1,000 in each trade. If you started with about 5K in each trade, you would end up with $200,000 in profits on jump trades. And let me say again, that is on real trades, winners and losers included, no compounding, no back testing. That's the real performance that we've put together so far on our jump trades. And by the way, like always, I mean, I'm taking these with my own money. I'm finding these. They're from my own account. I'm packaging them up and sending you the exact alert. So if you join this session, by the way, thank you for being here and sticking on. I do have a special offer that we've never done before. Like I said, just something a little special to try to encourage folks to give jump trades a try today. And it's a way for you to be able to try it and get into today's opportunity without breaking the bank. So I'm going to slash the price down. We're going to give you 3 months of access so that you can try it out. And it's not going to run you thousands of dollars, not even close to the $15.43 already discounted price that you can join jump trades for right now. Today, I'm going to let you get into jump trades. Again, all the training, all the material, all the master classes, the trade tracker, and our current opportunities for $395, something that we've never done before. It gives you 3 months of access. So, you figure maybe you'll get I don't know, 20 different trading opportunities targeting 100%, 150%, but for $3.95 so that you can go ahead, jump in there, give it a try, see if I'm full of crap or if these trades actually work. And you can go ahead and do it without breaking the bank. Maybe you've thought about joining jump trades, but you're not ready to go full commit. Just wanted to give you an opportunity to give it a try without spending thousands of dollars. And like I said, the first entry should come out in just a few hours. I say should because I do want to verify it. I need about 40 minutes here to see where we're at right around 3 o'clock. And if it's all set up, I'm going to fire off that trade to you. I might even do a bonus A-net earnings trade if you guys want me to. And I bet we'll probably get 100 students here before that opportunity hurts. And I hope we do. For me, my goal is to get as many people in when we're doing active opportunities so that you can see exactly how it works in real time as soon as you join. You're not waiting around to see if something matters. You're joining, you get a trade immediately. You're able to see it exactly how the alert works, how the trade actually performs in real time right out of the gate. So I hope we get as many folks jumping in today. We'll be targeting right around 200% on that trade. Again, not looking for a massive move. That's the key with jump trades. Looking for a small move, flipping the options so that we can go for a big gain. Okay, so what that means is you still get everything. You're not, when I say this, try it out, I don't mean you just get a sample. I mean, you get everything for 3 months. You get the alerts, the downsides, the performance. You can go through all the material, all the bonus training, all that kind of stuff. And if you're here right now and you want to get in on that, all you have to do is click the link in the chat, or you can also go to the link that we have posted right here, prosperitypub.com/jump. That automatically set for you at that $3.95 kind of introductory opportunity. I've never really done this before on any of my services, but I know last week I got a lot of questions about jump trades. I had mentioned kind of twisting these options for going for those bigger winners and had a whole bunch of questions about that. So I thought, let me do something special, kind of give you an opportunity. You don't have to spend thousands of dollars. You can jump in today, try, for the next couple months, see how these trades actually work. Like I said, see if I really can give you opportunities to make 100% plus on small moves in the stock market, because that's quite a claim. And I really wouldn't be able to do it outside of figuring out jump trades. So prosperitypub.com/jump. That order form is already set for you at just $3.95. So you can jump in, you can take a spot right now. I should have your next trade here in about an hour or less. You can also call our team at 904-706-3537. They can take your order right there at $3.95. You might need to tell them, hey, it's the $3.95 special because I just pulled this out. Just make sure they know that that's what you want to join. And yeah, get in for $3.95. Real quick, let me just answer a couple of the obvious questions. I know there's also some chat questions in there that I can jump into as well. So how much money is needed? Well, we trade these very cheap. So 50 to 200 bucks is about an average trade for us. You can get in really cheap and then just scale up. You can trade 1 contract, 10 contracts, whatever you want. We're typically trading very liquid stocks. We're trading, I think our most recent examples have been like Apple, Meta, Nvidia. So, I mean, you're obviously going to be able to trade it pretty cheap here, Tesla, and still have enough liquidity where if you want to scale up and trade more contracts, you definitely can. Will every trade be a winner? Always got to ask this question just to make sure everyone knows. Of course not. By the way, with jump trades, we'll actually have a lower win rate than a lot of my other strategies because we're going for these big winners. So, as long as we win more than like 40% of the time, we're going to have a phenomenally profitable strategy. We're going for, 55, 60% of the time right now, which is great if your average winner is going to be 150 plus percent. Ours right now is over 180%. So really thrilled with the performance so far and hoping to keep it up. And with these kind of momentum moves in both directions, I think it's a great opportunity to specifically target those outsized returns. Should we be worried about more downside? Well, as you guys know, I think the downside is a little overblown, but I think it could pick up in Q2 and Q3. And obviously, with jump trades, we have the opportunity to trade it in both directions. So keep that in mind. Jump trades is one of the strategies where I will trade in both directions. Next question. Can you trade this in an IRA, 401k, anything else? Yes. Like all my strategies, these are risk-defined trades, typically using a risk-defined debit spread, which means as long as your account is set up for options, You can trade it in any kind of account. You can trade it in IRA, 401k, any brokerage, E-Trade, Tasty, Robinhood, Schwab. They all work because it's all part of the same risk-defined debit spread. Okay, what's this trade? Well, you got to join, be one of the first 100 in there, and then you'll be sent it out. By the way, like I said, once you jump in, you can jump right into the Telegram where I share the entire trade with you there. So really nice for those of you who just want to get the entire trade alert right there on your phone or in Telegram. I do that for you. Okay. Let me jump in and see if there are a couple questions. Okay, Rob, what percent workout? I target anything over 50% win rate. So for me on jump trades, if I'm winning more than 50% of the time, I'm going to have a killer strategy because the average win has been really significant, about 182%. Right now, we're winning 59% of the time. So we're beating our expectations, which I'm obviously very happy about. But anything over 50%, I'm going to be really thrilled with on jump trades. DDC asked, how much are you willing to risk per trade? The way that I do it is I have a separate active trading account, and then I'll be more aggressive in that account. So I don't have my entire portfolio in one account. I have a separate account, and I might risk 5 or 10% per trade in that account. So that's kind of typical for me. Like I said, if you're in jump trades, you want to be prepared to lose trades because we're not going for a super high win rate. That's part of the game. Just to be super transparent, we will lose trades, probably close to half of them. If we win 55, 60% of the time, neato, gang, we're doing great. For E-Trade, I believe it is level 2. I know some brokers it's level 2, some brokers it's level 3. Just depends. I believe E-Trade is level 2 to be able to trade risk-defined spreads. Yeah, we're averaging about 1 trade a week on jump trades. I was trading actually more frequently when the market was more decisive. I was trading 2 to 3 times a week on these jump trades. Now we've been very back and forth, so I've just pulled the gas pedal off a little bit. But if we break all-time highs here and we get ripping, hopefully we'll get more opportunities. Thank you, Henry. I appreciate the feedback. Henry's one of my all-access members, so he obviously is included in jump trades and was saying that they've been great. Won 4 out of the last 5, which, again, not typical. We're not going to win 80% of the time, but been on a nice little run and looking for more. Rob asks, when are they posted? So for me, most of my jump trades are middle of the week, which is actually not typical. So a lot of my other strategies would be like Thursday and Friday, and more often Friday. Here, we're trading a lot of Tuesday, Wednesday trades. So more typical would be Tuesday, Wednesday. And then usually I'll wait towards the end of the day to put a trade on because I like to see how the day is shaping up. Okay, Ken says E-Trade does require level 3. So sorry, I gave a bad guess there. E-Trade is level 3. Sorry, they switched. It used to be level 2 pretty much everywhere, and now it is mostly level 3, I think, just because of, I don't know, the brokers wanting to make it harder, which I have a whole conspiracy theory about why they want to make it harder to get level 2 and level 3, but we won't go into that right now. By the way, if you are jumping into jump trades, just make sure you join the Telegram, you go into the masterclass, and then you just watch some of the live trades, because that will give you a lot of kind of context for how we do this. Israel, yeah, we are live right now. We are live right now, and we should have the next trade here in about 40 minutes if you want to jump in. Keep in mind, you can join for $3.95. Gives you kind of an opportunity here to test out jump trade, something I don't normally do, but wanted to give folks an opportunity to do that. I might do that with some other programs in the future as well. Just a way to give you kind of a no major commitment way to give it a try. Israel, yeah, well, Israel, I trade 8 to 10 different strategies. The way that I try to set up my portfolio is that I have a buy and hold portfolio, I have a dividends portfolio, and then I have about 8 to 10 active strategies that I'm kind of putting in one big pool. Now, not everyone trades that way, Israel. Some people like to really narrow their focus. I don't have a problem with that, but for me, I like to approach the market with a lot of different strategies at all times. That's always been my approach, to try to kind of create a pool of different strategies that hit the market in different ways. And so I am actively trading a lot of different stuff. For some people, that's too much. Totally understand. For me, I personally believe it's the best way to win. I think you have to have a strong edge, so you can't just throw anything at the wall. You have to have a strong edge. But as you multiply edges, different edges for different conditions, different scenarios, different seasonality stuff. To me, that's the way that I like to approach the market. I know, again, it's not for everyone. Some people kind of want to have one approach. When it works, it works. When it doesn't work, it doesn't work. Totally understand that as well. Okay. Any other questions? I know I kind of ripped through that pretty quickly. Tomorrow, I'm going to do a full presentation on this as well from start to finish. I think, yeah, I think that's on my calendar for tomorrow. So I'll plan on doing that. Take an entire hour, really walk through it step by step. But I just wanted to give you a quick opportunity to jump in, take a shot at it for 3 months if you think it's a good opportunity for you. No pressure if not, but get in for a lot cheaper than what you would typically be able to get into, and try it out for a little while. And if it's right for you, great. If not, no stress, no worries. I won't be offended. I'll never be offended if one of my strategies is not a fit for you. So I totally understand. Not everything is a perfect fit for everyone. And don't worry, you can tell me, you can be brutally honest. You can tell me it's you don't like the way it works, or it's too confusing, or you weren't able to follow it. Hopefully that's not the case. I really try to take people step by step by step through my approaches. I try to give away my entire strategy to people when they join. I don't hide things. I let you know exactly what I'm doing, why I'm doing it, so that you can learn along the way and not just guess what I'm doing. So for me, that's really important. I try to share everything with all my members. But if it's not right for you, then no worries. I totally understand that. So give it a try if you think it might be. Pass on it if you don't. And if you have any other questions, I'll hang tight for just one more minute. And then I got to get off and kind of get working in the markets here and try to set up our next jump trade. Yeah, let me pop this link in there for you. Here, I'll just pop it in. Eric, well, actually, that didn't actually give you the hyperlinked link. Here, let's do this. By the way, if you go to this order form, this is what it's going to look like right here. You can see the 395 special price is already put in there. You don't have to do anything else. You just fill out information, get the entire package. Again, just to be super clear here, guys, this is not like a trial where you get only the trades, or you get only one trade, or no, you get everything. This is you full access to everything I have in there. You can go through the master classes, learn the entire strategy. So it's all in there. It's just kind of an introductory way to give you an opportunity to give it a shot. So Eric, here's a hyperlinked one for you there. If you want to click that, that should take you right there. And it's $395. So for $395, which I've never done an offer like this before, I just wanted, like I said, give people a chance if they wanted to give it a try. I got a lot of questions about jump trades last week, and wanted to at least give you an opportunity on that. Tony. Okay. Tony, I don't have time to give a big spiel on all access, but let me give you the 30-second version. And then if you want to call this number, Tony, same number here. If you want to call them, they can obviously walk you through deeper details. But all access for me is where you get everything that I do. So you get all of the strategies in kind of in one place. I'm still really building out my all access membership. I talked about this last week. I actually wasn't planning on offering any all access memberships until like 2027. But we had a lot of people asking for it. So we kind of put it together quickly to give people access. And so I'm still kind of building out everything that I want to do in there. My goal is to make it the most incredible all access membership on the planet, but I'm not quite there yet. I'm still building out some special pages. I'm still putting out some indicators that you can only get as an all access member that I don't have available yet, but I'm working on. I'm trying to create a page where I can share some separate portfolio things that no one else is going to see. So all of that kind of stuff is still kind of being built for my all access members, just in full transparency Tony. But if you call them, they can walk you through it. Obviously, if you have some of the programs in my services right now, you get a discount and that kind of thing. And they have, all the details on that. Eric, I don't do any day trades by how do I say that? I don't do any purposeful day trades, I guess is what I'm saying. I might accidentally jump on a trade that moves so quick that it hits our target within one day, but that's extremely rare and it's never the intention. The intention is always to avoid day trading. There you go, Henry. None by design. Thank you. See, I've got members in here to help me speak English correctly and everything. None by design, Eric, is what I'm trying to say. They might happen on accident because the market moves really quickly, but that will be very infrequent. I've been messing around with a day trading thing by design, but as Israel said, I'm already jumping around. I've already got a lot going on, so we'll say we'll save that for another time. But none by design in the current landscape. Okay, folks. Yes, as Dakota mentioned, if you missed anything, feel free jump into that YouTube link. You can start from the beginning, hit that rewind button, and get rolling from the beginning. I appreciate all of you. Thanks for being on and spending part of your Tuesday with me. I'll see you the rest of the week. Stay tuned in Telegram, all that good stuff.